Your Excellency Mohammad Barkindo, Secretary General of OPEC, welcome to Bloomberg. The news today is that from His Excellency Khalid Al-Falih, 1 million barrels of cuts potentially. Is that enough to stop the drop in the price of oil?
Thank you very much for having me. We have met here over the weekend with the members of the Joint Ministerial Monitoring Committee of both OPEC and non-OPEC, together with our technical experts, and we thoroughly looked at the current data as well as the projections not only by us OPEC but by the IEA, by the EIA from the United States and many major banks. The conclusion we all came to is that at the moment in this quarter of 2018, the last quarter of 2018, the market is still relatively in a state of balance. There is no cause for alarm, but in projecting into 2019, because of a variety of factors, among which are rising non-OPEC supply, in particular from the United States. Last year, at this ADIPEC last year, if you recall, in my statements, I was quoting a possible increment of about 0.9 million barrels a day from the United States and non-OPEC. Today, 1 year later, the numbers are north of 2 million.
So is shale the biggest threat then to the market?
It is not a threat per se, but it depends on the way and manner in which we jointly handle this rising oversupply by our non-OPEC partners. But nevertheless, the headwinds that we are beginning to see is a return of disequilibrium in the market as a result of this rising supplies over passing demand that may lead into resurgence, if you like, of build-up in inventories, which is not in the interest of any one of us.
So 1 million barrels of a cut has been postured today at ADIPEC. We understand 500,000 may come from the Kingdom of Saudi Arabia. The other 500,000, Your Excellency, how is that to be shared amongst the OPEC and non-OPEC members?
I wouldn't say it in that way. What we did was to look at the numbers, and as I said earlier, the numbers are showing at the moment that supply will overtake demand in 2019, and it is no rocket science that that may lead to the resurgence of stocks, which we had been battling with since the declaration of cooperation. And these numbers vary from 1 million to about 1.2 million or so in terms of barrels that may constitute this oversupply, if you like. The decision on what to do can only be taken by the conference in December.
How close to getting Russia on board, the non-OPEC, the main non-OPEC member, do you believe that Russia will join you when if a cut is announced in Vienna in December?
Russia has proven beyond any reasonable doubt of its leadership position in this alliance, if you like, in the declaration of cooperation. The Russian Federation had played a significant role in ensuring that we come together on board with the non-OPEC.
And when, do you feel Mr. Novak will support you, sir?
When it comes to the implementation, Russia had also played its part in the last 20 months or so. And Mr. Novak was with us yesterday. And I am confident that going forward, we will continue in this collective fashion, irrespective of the decision that we take on the 6th and the 7th of December in Vienna.
His Excellency Khalid Al-Falih last night intimated at the news conference that those nations which already have been exempted, Nigeria and Libya, may need to be brought into the fold. Are those conversations starting?
Yes, we have started these conversations.
Are you hopeful that they will bear some of the show?
His Excellency Emmanuel Kachiko of Nigeria had phoned in to the conference to give us the benefit of his thoughts. We have been in touch with Mustafa Sanala of Libya. So these discussions are continuing, and this is all to prepare us for December. We have only 2 days to meet, and these issues require much more than 2 days, and hence we are devoting this time to consult with all the parties involved, and I think that's very positive.
Do you feel that Nigeria will be open to joining you?
We will have to wait for the final decision from Emmanuel Kachiko, who will definitely be at the conference in December. But from our discussions with him last night, he looks optimistic. Going into 2019, there is need for everybody to be on board.
I'm looking at NI Tweet, the function that we have on Bloomberg. I'm waiting to hear from the President of the United States of America in regards to the cut. Have you heard from the US government since His Excellency Khalid Al-Falih suggested a cut was on the agenda?
We address the global industry. We address our immediate constituency, which is now 25 participating countries in the Declaration of Cooperation. The United States is a very important stakeholder, and hence our decision to reach out to them 2 years ago, especially the companies in the shale basins, to begin to exchange information and data. And we have got a positive response from them that we should continue with these interactions. We look forward to again meeting with them in Houston during Sarah Week. We have been able to break all barriers, not only between OPEC and non-OPEC, but also between IOCs and NOCs, between producers in the shale basins and those who are in the conventional plays, those who are offshore and offshore. We have proven in the last 2 years of the Declaration of Cooperation that our industry is a global industry that cannot be encumbered by any artificial barriers. The US is a leader in this industry, and we look forward to its continued leadership in technology, in production, in refining, and this is in the best interest not only of the United States, but the global community as a whole. They are today one of the leading exporters of crude oil, which is very positive, and we appreciate that.
Can I ask you, last night the language that was used in the communique was a corridor for oil. The actions of a 1 million barrel cut, if that's what we get, where do you see that corridor?
There is no decision at the moment.
The prospect of a cut. The prospect of a cut.
There is no decision by the JMMC. The JMMC is a monitoring committee and is doing its job diligently well. We are satisfied with the work that we have done over the weekend in Abu Dhabi, and we are continuing with these consultations here in ADIPEC, and after ADIPEC, we want to equip ourselves going into December to take informed, comprehensive decisions.
My apologies, the clarity is very clear there. For you, your ambition to create the corridor, is the corridor, a comfortable corridor, is $70 floor for you and the members?
You know very well that price has ceased to be one of our considerations long time ago. We focus on the supply and demand fundamentals. We focus on our joint efforts to restore stability on a sustainable basis. Here in ADIPEC, since morning, I have spoken to several major consuming countries. What they are interested in is this relative stability that we have been able to achieve to be sustained, to continue, for them to be able to plan, for them to be able to access credit, for them to be able to take FID of their projects. Without that stability, all this would be in jeopardy. So we are further encouraged by the consuming countries to continue to stay the course, and we are determined to do that.
Will there be a new non-OPEC HQ in Vienna?
We are flexible, we are open to discussions. These discussions are ongoing. We have 25 parties at the moment, and each party have their own views. We have met on the 23rd of October with the OPEC group to get their feedback. We have met on the 7th of November in Vienna with the non-OPEC group, just before I came to Abu Dhabi, to also hear from them their feedback. We intend to circulate a synthesis report of all those meetings to all the 25 to enable them consult with their governments so that when we converge in Vienna, hopefully they will be in a position to take a decision that will take this partnership between ourselves and non-OPEC to a higher degree.
Your Excellency, can we close with a comment on the latest forecast, the OPEC forecast for the demand growth, your scenario from the data you have looked at?
The demand growth data that we have looked at is not only from OPEC. We have looked at the IEA, we have looked at the EIA, we have looked at banks like Goldman Sachs and what have you. There is almost an emerging consensus that as a result of the cooling off of global GDP growth in 2019, demand will also decelerate, and hence the revisions by all these institutions of the demand growth projections for 2019. When we met here last year, we were looking at a region of about 1.5, 4 or 1.6 for 2018. Today, we are looking for 2019 much lower than that. So both parameters of supply and demand are facing revisions, one up, the other one down, and our job will continue not only to monitor, but hopefully to persuade all the players to take joint action to be able to manage and maintain this stability going forward.